Listen, something that doesn't get said enough is just how tough it can be trying to balance your trading around other full-time commitments, things like work, studying, family stuff. But that is what most people are trying to do. It's just that everyone gets told, yeah, it's straightforward, have trading as a part-time income. But actually, balancing these things can be tough. I know because these days I also have a lot of projects going on at the same time, and so I've had to come up with a system of how I can balance my trading alongside all these other things without dropping the ball anywhere. And so what I wanted to do in this video is to show you, by using an example of a trade I had last week on WTI, how I balance things. Now, this is the week before the OPEC meeting, so before the huge rise we've seen this week. But hopefully this will give you an indication of how you can approach things to find an easier way to balance everything. And if you're one of our members, I also did 2 long live streams last year, which you can find replays of in our members area, where I explained the process that you could follow to fit your trading around your work much better. Now, if you aren't a member, but you think that sounds interesting and something that will be useful for you, then just hit the like button, let me know in the comments, and if enough people want to hear about that, then maybe we can cover it in a future video for you. Now, there's this really common misconception that if you want to succeed in trading, or if you are succeeding in trading, it has to take up all your time and be the only thing you do. But in fact, the better you get at trading, the more efficient you can be with it. You know what does need your focus or not, where to spend your time, where not to spend your time. When I was first trading, it was alongside my studying, and then it was alongside my full-time career. But then when I quit my job in banking in 2012 to trade full-time, it became literally all I did, all day long, full-time trading, day trading. But then over the years, I realized I could do more things with my time. Most of my time was spent waiting at the screens. So instead, I started including other projects that I found exciting alongside the trading. So at the moment now, I have my trading, I have this YouTube channel, I have a second YouTube channel called Market Movers, which you'll find linked up here, where we cover the financial news, a little subtle plug there for you. I support our members, I live stream in our app 3 or 4 times a week. I run a business where we're building a trading platform and I spend time managing my team, having calls with them. And I also do some consulting, whether that's for a political campaign for half a year up until the start of this year, or currently with some investment firms. So it's a lot of stuff to balance. And that's not to mention things like working out, reading a lot, learning to code, learning to speak Spanish, playing guitar, spending time with my girlfriend and my family, and sometimes I even have time to sleep or go to the toilet, only when I'm very lucky though. Now, I will say this is a lot of stuff to take on. It's probably an unhealthy amount. It does burn me out, it wears me out, but I love it. I like having the variety. I like doing different things all the time. I hate staying still. And to be honest, what else do you want to do during a global pandemic? There's not that much going on. So the only way I can do all of this and still trade is to have a system. But not just a system for analyzing the markets and finding opportunities like a trading system, but also a system for how I manage my time and how I fit trading around everything else. I need to make sure that I'm not wasting my attention and focus on, looking at the charts at times when it's not needed. I think too many people are attached to the charts an unnecessary amount of time, and it's not always productive time. It's a waste of your precious time to be sitting there staring at price movements that have no relevance to the way that you want to trade. Now, I think it's important that I point out that my trading schedule does alternate sometimes depending on the markets. So if I feel like it, or if there are particularly good conditions for trading at some points, then I might have weeks where I have longer, more active trading sessions, where it's more like active day trading full time. But most weeks, at the moment at least, are like what I'm going to explain to you. So I break my trading up into 3 main activities. I have my preparation sessions once or twice a week, that are the longest sessions. Then I have update sessions every day and checkup sessions as and when they're needed, usually a few times a day. Now, my prep sessions will last as long as they need to, but typically they'll be a couple of hours. And I prefer to do this on a Sunday since the markets are shut and it's just before the markets are going to open again. So at this point, I'm doing high-level analysis, whether that's with technicals or fundamentals, to decide which 1 or 2 markets I want to focus on for the upcoming trading sessions. Now, the reason these sessions are only a couple of hours is because not that much changes from one week to the next. So most of the time it's just updating the analysis rather than having to start from scratch. But the first time you do your prep session, it's obviously going to take a long time if you're starting from scratch and building up your analysis on the charts or whatever else. But then most of the time after that, it's just sort of changing what needs to be changed, and it doesn't take so long. Then my update sessions are each day, usually half an hour to an hour long, where I'm updating the intraday analysis on the chosen markets, setting alerts, and setting plans of action. Then I have checkup sessions based on key events happening or alerts going off to let me know I need to look at the charts. This might be while I'm looking for an entry or once I'm already in a trade, but basically at these times I assess the situation and execute any actions that I have based on the plan of action that I've predetermined. So let's go through each of these individually using the example of my WTI trade from last week. From experience, both from my own trading and from helping other traders, I believe that one of the most critical parts of successful trading is choosing the right market to focus on. You need to know the type of trade you're looking for and the expected time horizon of your trade. In other words, the average expected holding period. So you can then cut down where you spend your attention and only focus on the very best markets for you, so you don't drain yourself out looking at all markets when it's not necessary. So during weeks where I'm not going to be at the charts full time, I know that if I find a trade, the time horizon will either need to be an entire day or multiple days, but it's unlikely that I'll be holding the trade over the weekend. So the average holding time for a trade that I'm looking for is probably a day and a half to 3 days. And it's important that I know this ahead of time because you want to start with the end in mind. I want to be analyzing the charts looking for that. So this means my preparation sessions are going to be focused on the daily and the weekly charts in terms of technical analysis and any fundamental analysis that combines with that. My trading time frame will be based on the 1 hour chart. This is what I call my working time frame, with the 4 hour chart and a 15-minute chart supporting that. So I want to find an interesting situation on the daily chart so I know that that's the market that I should focus on. It's got to match certain criteria that I know facilitates a good opportunity in a lot of cases. In the case of my WTI trade, the analysis was a combination of the fundamentals and the technicals. And if you watch our market movers video linked up here from a few days before I opened the trade, then you can see how I was seeing things, like get an overview of what I was looking for at that particular point in time before I even opened the trade. So there were basically 3 price levels that I was interested in. There was one which was below the price in case there was a bearish move. I didn't really see us approaching that one, but it was around $52.6. But since price was heading up, I was looking at prices above where the price was, the first being at 60.3-ish, and then again at around $64. And that last price, $64, was the one that I was particularly interested in because anything near there would be worth my attention. I knew that the price was going to struggle. It would need a big push of momentum, something like the OPEC meeting that we've had over the past week, but this is obviously before that. Now, at this point, I needed 2 things. The first thing is I needed to set an alert so that I knew when the price was approaching an interesting area. And the second is that I needed to have a specific plan of action for when that alert goes off. And I'll explain both of these with the next step, since they're also things that happen during the update sessions. My update sessions happen every day. My trading system is sort of like this funnel that leads me from one step to the next, sort of going down from where I've got all the markets all the way down to a trade opportunity at the end. So if at any step in that funnel, I'm not getting something that I need, I don't force it and move on to the next step anyway. I'll just switch to a different market or wait until things fit nicely. I'm not trying to force things just to get a trade entry. So my update sessions will usually start on the hourly chart, but sometimes it could be the 4 hour chart depending on what time horizon I'm expecting for my trade based on what I've seen during my prep session. And at this point, I'm breaking down the market on my working timeframes to see where there are potential areas that could be interesting for possible trades. So I'm marking it up, and if needed, I'll drop down to the 15-minute chart and do the same thing there, but that's not always necessary. It just depends on what I need for that specific trade at that point in time. So for the WTI trade, for example, I knew there was a lot of bullish momentum, bigger picture. So I would need to have either a really strong setup, strong double confirmation, or at least to see structure starting to turn bearish or weakness in the structure on the intraday before I start to find a setup. That way I could make sure that I'm not getting impaled on the top of a big momentum bull run. Now, I've actually been live streaming some of these sessions each week in our app for our members, so you can still check out the replays of those sessions and see how I'm breaking things down, how I'm setting alerts and so on. Now, it's really important at this point that I don't force things. I'm not trying to fit the analysis to suit what I want to find. Instead, I'm analyzing the markets objectively and then seeing if it matches what I want to find. So it's not that I'm forcing this to fit this, it's that I'm comparing this to this and saying, okay, does that match? If so, let's go ahead. So if I see an area that's of interest, I'll set an alert. I'll also set notifications for myself about any disruptive events that are coming up, such as economic data releases, speeches, and so on. But since I know the alerts can come at any point in time, I might be busy when the alert happens. So I need to make my life easier by guiding my future actions. So as you'll know from a recent video, my approach to trading is a context-based approach. So I'm setting the alerts based on the context, points where the context might be changing, and then I'm taking note of what I need to do. So when I get that alert, I can assess the context, see what's happening, and then cross-reference against my notes to see if I need to take action and what action I need to take. Then each day I'll update the charts during my other update sessions in case any of the analysis is now out of date or changed, the structure's changed one way or the other. I'll set new alerts and new plans of what I need to do. And these plans are very short. It's not like I'm writing a full page. It's like got to be something that I can pick up on in the moment. It will tell me what an acceptable setup is, what sort of position size I could use, what the context would be, where my next decision points will be, and what next actions I will need to take at those decision points. That way I'm setting the plan when I'm thinking at my clearest, not when I'm busy. So when I get the alert and I might be busy or I'm in the moment and I've got to make a quick decision, I only need to follow that plan. You know, I'm not caught out in the moment making unclear decisions. If I'm busy, it means that I can't think with as much clarity. So instead, I'm setting a plan when I have absolute clarity and I'm following that plan based on my context-based approach when I get that alert. These alerts will go off when the price approaches an interesting area for me, or when something happens that I need to be aware of, such as relevant economic data and so on. I'll set little alarms so I know that that economic data release that's important to this market I'm following, when that's happening, I'll go and look at the charts. So in the case of WTI, I was first alerted as the price approached $62, but no opportunity came up for an entry. So the next alert then went off when the price was above $63 because it was heading towards $64. And at that point, it was still fairly bullish. So I didn't want to find a setup that was going against that. Instead, I needed to wait for the first sign that structure was weaker or turning bearish. So when I had that alert, I then set a new alert based on a point on the chart where the context would change to give me the earliest sign that it's changing to potentially be bearish. So when the price broke this trend line, I was alerted again because that was the earliest indication that we might be starting to have bearish structure. So I wanted to see some sort of failure for the price to push back up, so price pushing back up and failing to do so. So I set my alert on a retest, and just before I was about to start a video call on Friday morning, I had a double confirmation set up according to the Duomo method, and that was my chance to enter the trade, which I did just before I started the call. Now, since I trade a context-based approach, I don't need to monitor every single candle. I only need to monitor when it's around areas where the context might change. So there were three things that I needed alerts for at that point in time. The first alert was for if the price pushed up. I'd need an alert at the point where it would be the earliest sign that the bearish context is changing and switching back to bullish structure again, because then I'd need to know whether I exit a trade early or let it go to my stop loss. The second would be if the price moved lower and hit the next path of resistance, because that would be my first decision point. I'd need to know whether I should scale out of the trade or stay in. I wasn't going to exit yet, I already knew that, because I knew based on the bigger picture, I was looking to ride the trade lower based on structure. So my actions to a certain extent were already clear in advance. I just needed to assess the situation, and I knew already what the criteria would be for scaling out or staying in the trade. And therefore, when I sort of approach that level, I could decide if there's failure at the level, in that case, I could scale out, otherwise just stay in. And then finally, I'd have an alert based on time rather than price. So time for data releases. I'd want to know if data releases were coming out that were going to disrupt things in case I needed to exit the trade or scale out or adjust my stop loss. And once those were out of the way, then I'd set alarms for as we got closer to the day so I could decide if I wanted to be out of the trade before the weekend or not. Because most of the time I want to be exiting the trade before the weekend so I'm not holding on while there's the extra uncertainty. Now, since the move was fairly bearish, all I had to do when my alerts went off was update my alerts, set new ones, and set new decision points. So I just stayed in the trade. It was really straightforward. But then at 7 p.m. UK time, my alarm went off for deciding whether to stay in the trade for the weekend or not. And since there's a lot of uncertainties in the world right now, and I knew the next week would be the OPEC meeting, I decided it was time to get out. And so I closed my trade with 100 pips profit for a one-day move. I think it was something like 8 or 9 hours that I was in the trade for. So in total, other than the initial analysis in my preparation session, I probably spent no more than 1 hour in total working on this trade throughout the week, both before the entry and during when the trade was open. Now, this is possible because I have a system, not just in terms of how I analyze the markets and open my trades, but also in terms of how I use my time at the charts and how I prompt myself with what I need to do next. It's not a set and forget system, it's quite active, but I'm only being active at the times that I need to be. I'm not being active constantly when I know that I only need to have pockets of activity. So I don't have to be constantly trying to figure things out over and over again. I leave myself little markers so I know exactly what I need to do, and therefore I can keep the whole process really efficient. So this was just one example, but remember, if you want me to explain how to break down this process for yourself and what things you need to keep in mind, then just let me know. Leave a like and a comment in the comment section down below. Or if you're a member, check out those live streams in the members area. And if you're thinking about becoming a member, then do me a favor first and check out our free training. It'll be linked on screen, and that way you can check if it's the right thing for you. But do you know what is the right thing for you to do now? This video that's on screen is all about emotions in trading. It's one of the most important videos we've done. People always spread misinformation about emotions in trading. It's something that everyone gets wrong, and this is a real game changer when you get it right. And in fact, I was also getting it wrong for many years until I finally researched it and found out the truth. So it's a long video, but it's definitely worth your time. Anyway, I hope this video was helpful. Let me know if you want that next one on this topic. Thanks a lot for watching, and I'll see you in the next one. Take care, guys.